Welcome back to another episode of JRNY TV, where we make the complex world of digital finance not so complex. Something massive is quietly unfolding behind the scenes currently of the cryptocurrency market, something that could in fact change the entire landscape as we currently know it. While those retail investors have been distracted by meme coins, market dips, and short-term headlines, some of the biggest institutions on Wall Street, including but not limited to BlackRock, Fidelity, and JP Morgan, have all been quietly but rapidly accumulating cryptocurrency assets. But what exactly is driving this sudden institutional buying spree? Well, those institutions, they move with careful calculation, precision, and massive amounts of capital, far beyond the reach of retail investors. After years of skepticism and regulatory uncertainty, the year 2025 is shaping up as a tipping point where crypto adoption by financial institutions finally becomes mainstream. Institutions are positioning themselves to capitalize on cryptocurrency's next wave, drawn in by the clearer regulations, increased market legitimacy through ETFs, and the exponential growth potential that blockchain technology provides. Quite simply, crypto has evolved from the speculative asset to strategic investment in their eyes. In today's video, we're going to reveal exactly which cryptocurrencies these institutional heavyweights are quietly buying, and more importantly, why they're specifically targeting coins like Bitcoin, Ethereum, XRP, and Solana, and even surprisingly mainstream picks like Dogecoin as well as Litecoin. Understanding their motivations and strategic plays, it could offer retail investors critical insights and enormous potential upside. By the end of this episode, you'll know exactly what the smart money is doing and precisely how to position yourself alongside some of the most influential financial players in the game. So buckle up, because crypto's institutional era has officially arrived. Why institutions are flooding crypto in 2025. To fully grasp why institutions like BlackRock, Fidelity, and JP Morgan, just to name a few, are all jumping into crypto, you need to understand the seismic shift that's happening right now in the broader financial world. First off, regulation is finally catching up. Thank goodness. Because after years of uncertainty, global regulators, especially in the US and Europe, have begun providing clearer frameworks for cryptocurrencies, removing significant barriers that previously kept institutional investors at bay. This clarity offers the stability and legitimacy institutions crave, reducing the risk and opening the floodgates for billions of dollars to safely enter the crypto market. Another major catalyst that's attracting institutional capital is the accelerating adoption of Bitcoin and Ethereum ETFs, specifically in the United States market. Institutions prefer regulated investment vehicles, and ETFs offer them the perfect bridge to cryptocurrency exposure without the complexity of holding actual coins. The approval and launch of Bitcoin ETFs by giants like BlackRock, previously skeptical of crypto, it signals to Wall Street that crypto is in fact officially mainstream. Consequently, what began as cautious exploration has in fact quickly evolved into active accumulation, causing institutions to secure positions before crypto truly explodes into broader public adoption. Lastly, institutions are strategically moving into crypto to hedge against traditional economic instability and inflationary risks. With increasing global debt, geopolitical tensions, and persistent inflation concerns, traditional financial markets face uncertainty and diminished returns. Institutions now view Bitcoin and leading altcoins like Ethereum, XRP, and Solana as viable alternatives, digital gold, if you will, that provide diversification, strong growth potential, and resilience against economic shocks. In short, crypto's narrative as a safe haven asset class has finally penetrated the boardrooms of the financial elite. At JRNY TV, we believe this institutional shift, it represents one of the biggest opportunities of our lifetime, and understanding the rationale, it is crucial to positioning yourself successfully ahead of the curve. The institutional gold rush begins. No discussion about institutional crypto adoption could possibly begin without Bitcoin, the one and only, the original cryptocurrency that is quickly becoming the preferred digital asset of choice for Wall Street giants. Even though Bitcoin's mainstream popularity isn't new, institutions have significantly ramped up their accumulation throughout the 2025 year, motivated by clear regulation, ETF approvals, and the asset's increasingly recognized role as digital gold. BlackRock CEO Larry Fink, he recently shifted his stance, openly praising Bitcoin and highlighting its unique potential as a hedge against inflation, currency debasement, and global economic uncertainty. So if the world's largest asset manager is placing its bets on Bitcoin, it signals something massive is in fact brewing beneath the surface. The introduction of Bitcoin ETFs is perhaps the strongest catalyst for the institutional accumulation. BlackRock, Fidelity, and ARK Invest have all each filed applications, with many already approved, marking a significant milestone in crypto history. Bitcoin ETFs simplify institutional investing by removing technical and custodial hurdles, making Bitcoin exposure just as easy as buying shares in traditional stocks. The resulting surge in institutional buying pressure is expected to propel Bitcoin into unprecedented valuation territory over the next few years alone. Make no mistake, these ETFs are more than just financial products. They are in fact powerful signals to Wall Street and beyond that Bitcoin is here to stay. On-chain data further confirms institutional involvement, as whale wallets containing significant amounts of Bitcoin have steadily increased holdings since early 2025. Major financial institutions, hedge funds, and even sovereign wealth funds are all diversifying into Bitcoin, recognizing its strategic value in portfolio management. Here at JRNY TV, we project this institutional wave will significantly drive Bitcoin's valuation upward, positioning Bitcoin to reclaim and surpass its previous all-time high, potentially targeting $150,000 to $200,000 by 2025. For retail investors, understanding institutional moves in Bitcoin isn't just about staying informed, it is about staying ahead, as crypto's institutional gold rush accelerates dramatically. Section 4, Wall Street's crypto darling, Ethereum. Next on our list is Ethereum, the undisputed king or queen of decentralized finance, DeFi, NFTs, and smart contracts. Although Bitcoin often steals headlines, institutions in 2025 are equally bullish on Ethereum, quietly accumulating Ethereum behind the scenes at an astonishing rate. Ethereum's network dominance, strong fundamentals, and ongoing infrastructure improvements have all made it Wall Street's favorite crypto beyond Bitcoin. Recent developments, particularly Ethereum's successful transition to proof of stake and growing layer 2 scaling solutions like Arbitrum and Optimism, have both dramatically increased Ethereum's effectiveness to institutional investors. Ethereum's upcoming ETF listings have also further accelerated institutional demand. Similar to Bitcoin ETFs, Ethereum ETFs allow institutions streamlined exposure to Ethereum without directly holding the underlying asset, essentially opening a multi-billion-dollar doorway for traditional finance into crypto's leading smart contract platform. Fidelity, VanEck, and even JP Morgan have all actively explored Ethereum ETF products, signaling deep institutional conviction in Ethereum's long-term potential. These ETFs will undoubtedly serve as a powerful catalyst, significantly boosting Ethereum's valuation as massive institutional capital continues to pour into the asset. On-chain analytics confirm this bullish institutional sentiment. Ethereum, whale wallets, and institutional custody addresses have steadily increased Ethereum holdings, indicating clear confidence in Ethereum's strategic positioning for the next crypto bull market. Institutions are recognizing Ethereum's unique role as crypto's foundational platform for decentralized finance, NFTs, and tokenization of real-world assets, one of 2025's hottest investment narratives. Here at JRNY TV, we foresee Ethereum not only reclaiming its previous highs, but realistically surging towards price targets upwards of $10,000 to even $15,000 by 2025. It is possible. Institutions know exactly where Ethereum's headed. Smart investors would be wise to follow their lead before the window closes. Next up is Solana, the lightning-fast blockchain network that's quietly regaining institutional confidence and capital after experiencing significant volatility. Although Solana previously saw tremendous hype, recent setbacks, including network outages and the collapse of major institutional backers like FTX, have caused many retail investors to unfortunately take a step back. However, institutions have taken a contrarian stance, quietly recognizing that Solana's fundamental strengths and extraordinary scalability are nothing short of amazing. They've begun accumulating SOL tokens at significantly lower prices, positioning themselves for a powerful comeback narrative. So why exactly are big players betting on Solana now? Institutions value speed, efficiency, and low fees. And Solana offers unmatched performance, routinely handling thousands of transactions per second with minimal costs. This efficiency makes Solana an ideal blockchain for institutional-grade decentralized finance, trading platforms, and next-generation apps in gaming and tokenized real-world assets. Additionally, Solana's strategic partnerships, including deals with Visa, Shopify, and major gaming companies, all reinforce the long-term potential that institutions will in fact find irresistible. While some retail investors have moved on, institutions are seizing this opportunity, confident that Solana will in fact reemerge stronger and more resilient than ever before. Recent on-chain metrics confirm the institutional optimism, showcasing increased whale activity and significant accumulation by venture capitalists and hedge funds. Notably, major firms such as A16Z, Multicoin Capital, and even financial giants like JP Morgan, just to name a few, have all expressed renewed interest, quietly strengthening their Solana positions throughout 2025. Considering Solana's capacity to support enterprise-level DeFi, gaming, NFTs, and payments, here at JRNY TV, we predict a significant rebound with explosive upside by 2025. 2025. Realistically, Solana could surge back to its previous all-time high, potentially exceeding it and aiming at price targets between $300 to $500. Institutions clearly recognize Solana's resilience and potential. Smart investors, they should too. XRP, the native token of Ripple's payment network, has quietly emerged as a preferred choice for institutions, specifically following Ripple Labs' landmark legal victories in the US. While XRP's tumultuous history with regulatory uncertainty previously kept many institutional investors away, the landscape has drastically shifted. With clarity finally secured, XRP now offers institutions exactly what they seek: a high-speed, low-cost bridge for global payments and cross-border transfers. Those big players, including banks and financial services giants, see XRP as a strategic asset poised to reshape international financial settlements. But why exactly is XRP undervalued right now, despite institutional backing? Simply put, the market still hasn't fully priced in XRP's regulatory wins and Ripple's growing network of banking partnerships. Institutions, however, have been quick to notice quietly accumulating XRP tokens as the retail market hesitates. Ripple's powerful network, RippleNet, it currently connects hundreds of financial institutions globally, including Bank of America, Santander, and even central banks offering near-instant, low-cost cross-border payments. Wall Street sees XRP as an integral bridge asset that could in fact reshape traditional finance as we know it, a fact largely overlooked by average crypto investors who unfortunately remain fixated on short-term volatility. On-chain data underscores the growing institutional bullishness around XRP. Whale activity surged significantly throughout 2025, with large institutions and hedge funds discreetly increasing their XRP positions. Reports indicate JP Morgan and other leading financial firms, they're closely evaluating Ripple's payment rails for cross-border transactions. Here at Journey TV, we believe this institutional support strongly positions XRP for substantial appreciation in the next crypto bull cycle. Realistically, XRP could reclaim its previous all-time high, potentially skyrocketing to $5 or even beyond by 2025, driven by widespread institutional adoption and greater market clarity. For savvy investors, XRP is not just undervalued, it's potentially the best opportunity to align with Wall Street's quiet crypto play. How is Wall Street shaping crypto's future? It is impossible to discuss crypto's institutional wave without highlighting the heavyweights driving this monumental shift. While the Wall Street titans like BlackRock, Fidelity, and JP Morgan are no longer sitting on the sidelines, they are becoming central players in reshaping the crypto industry. BlackRock alone, managing over $10 trillion in assets, has rapidly become one of crypto's most influential participants. Their aggressive entry, specifically through Bitcoin and Ethereum ETF products, has effectively stamped crypto assets with a brand new level of legitimacy and mainstream acceptance worldwide, significantly influencing how both institutions and retail investors perceive crypto investments. But it's not just BlackRock. Fidelity, a financial giant managing trillions of dollars, has in fact taken substantial steps into crypto, including but not limited to launching Fidelity Digital Assets, a dedicated crypto trading and custody platform that's tailored specifically for institutional clients. The whales. Fidelity's strategic moves have not only brought substantial institutional capital into the crypto market, but it's also set a critical benchmark for regulatory compliance and legitimacy. Historically, a huge crypto skeptic under CEO Jamie Dimon has quietly embraced blockchain technology, notably through JPM Coin and expanding blockchain initiatives that help incorporate Ethereum and Polygon technology. The institutionalization of crypto by these giants, it signals the definitive mainstream acceptance of digital assets everywhere. The implications for everyday investors, they're enormous, with institutional capital pouring into cryptocurrencies, especially through ETFs. Liquidity, stability, and overall market credibility are set to improve dramatically. Institutions are meticulously positioning themselves, signaling a significant long-term commitment rather than a speculative gamble. Here at Journey TV, we see this shift as a strong indication of crypto's maturity into a major global asset class. Smart retail investors who align themselves now ahead of mass adoption, triggered by these financial powerhouses, are positioning themselves for substantial long-term gains. Bottom line, crypto isn't just evolving, it is being fundamentally reshaped by Wall Street, and understanding this dynamic could in fact make all the difference for your investment strategy. What does institutional adoption mean for you, and how do you prepare? So with Wall Street giants, influential figures, and powerful institutions quietly flooding the crypto market, what does all this actually mean for you, the everyday retail investor? Simply put, institutions that are entering the crypto space signifies a fundamental shift in the market. It's no longer about the speculative bets or short-term hype. Crypto has entered a brand new era defined by long-term institutional commitment, mainstream legitimacy, and transformative growth potential. The presence of institutional capital, it brings greater stability, reduces volatility, and legitimizes crypto assets on the global financial stage, paving the way for sustainable long-term growth. But there is of course a catch, a critical catch. Institutional money moves quietly, decisively, and strategically. By the time the mainstream realizes what institutions are actually doing, the largest profits are already taken. This means retail investors must act proactively, positioning themselves alongside institutions rather than trailing behind. The very best strategy here is to align your investments with institutional targets, focusing heavily on established cryptos like Bitcoin, Ethereum, Solana, XRP, and carefully selected altcoins like ADA, Cardano, Litecoin, and Dogecoin. Understanding institutional moves isn't just insightful, it is in fact critical. It allows you to capture potential massive upside early instead of chasing pumps later. Here at JRNY TV, we firmly believe that retail investors still have a significant opportunity right now to front-run these institutional moves, but that window is narrowing quickly. As ETFs become commonplace, as Wall Street capital floods into crypto, and as clear regulations solidify crypto's place in global finance, valuations of these assets will naturally surge. Positioning yourself strategically today could translate into significant wealth in the near future. So stay vigilant, invest smartly, and always watch what the institutional whales are doing. And above all, always remember, the future belongs to those who start preparing for it today. Until next time, keep learning, investing wisely, and stay ahead of the curve with JRNY TV. We'll see you in the next one.